So now we'll go to the second part of this program, and that is basically saying a thank you. In fact, today, on this day, 28th of July, exactly in 2008, my first SIP was logged in, and that was of 2,500 rupees. And that also, if I want, I can even mention, he did come, he was supposed to come, Dr. Naguesh Pai. He was the first SIP registered of 2,500, and from that time till now, he's still there. Only thing today, he has become a grandfather. So today he could not make it here, so that was the only issue. Otherwise he also would have been here. The journey started exactly 15 years back. And from that day till today, there have been lots of ups and downs like the stock market. But in our case, the volatility is very much less. It was like actually the power of compounding. So I said I will share with you first my 15 years of journey right from March 2008. How it started by accident. It was not actually by choice. It was just by accident or by invitation, where we didn't even have a dream that we'll be financial advisors like this at this stage. So in 2008, the journey started by the invitation given by Max Lee of Life in the life insurance industry. And we started by getting the IRDA license exactly in March, on the 28th of March 2008. Fortunately, after that, we logged in our first policy in the life insurance industry exactly on the 28th of March 2008. And soon after that, by the time we reached, the mutual fund industry was in the month of July. That was introduced, like I was invited into this mutual fund industry, and I said, let me just try it out. Let's see what exactly is that, because I didn't know much about it. So I just started, and the first SIP was registered exactly on the 28th of July 2008, which is exactly 15 years from now. Before this, prior. And from there has never been stopping back, because in March 2023, we crossed our first 10 crores, and that took almost 5 years. So in the first 5 years, it was touching the 10 crore mark. So there was a big transition from that stage, and I'll tell you, these 5 years were basically the learning stage, where we were actually learning what exactly it is. And once we saw the markets hitting in 2014, when the markets really climbed up, then in September 2018, we managed to cross the 50 crore mark within a period of another 3 to 4 years. And after that, it has been continuously moving. We touched 100 crores in 2019 before the lockdown. Then our SIP book crossed 1 crore exactly in August 2020. And this is down during the lockdown. During the lockdown, SIP started increasing because of our online meetings. And that Zoom meetings really made a big difference. Then in 2021, that was about 2 years back, we managed to cross the 200 crores. So from 100 crores to 200 crores, it happened in just around 3 years. And now from 200 crores in September 2022, we crossed the 2 crore SIP book, which is almost the third highest in the country now. And then today, if you see exactly after completing 15 years, we have actually reached to 380 crores, which is almost 3 times of what we did in the last 5 years. And our SIP book now currently is 2.3 crores with more than 3,000 investors investing in SIPs. And this growth has been like phenomenal over the period of 15 years. But let me tell you my experience as far as this 15 years are concerned. And also another thing that has happened is as far as setting up the offices are concerned. In July we started the Margam office. In October 2017 was the Panjim office. In 2018 June was the Ponda office. And in 2019 was the Vasco office. And all these 4 offices are functioning full-fledged now. In fact, we even tried going still further. Like we started in Aldana, we had started in Bicholim, then we started in Shishini, but then we saw it's not feasible to manage all these offices together. So then from that time, now we have gone another step where we have started our agency managers job. Wherein now we are recruiting and advising and helping many of them to actually make a career in this mutual fund industry, to take it to the villages. And today we have 3 of them which are really good work. Definitely going to see that the passion is there as far as mutual funds is concerned, which I'll introduce at the end of the session. But now my main focus in this is, what are the actual learnings during this 15 years journey? How many of you all actually believe that it's difficult to grow rich in India? Do you all feel that it's still difficult to grow rich in India? I'm telling you, it's very, very easy. Anybody can grow rich, provided you start thinking like the rich. If your mindset is like the rich, anybody will grow rich. Now, let me tell you my journey in mutual funds. First 5 years, I was actually saving in mutual funds. Now, what do I mean by saying saving in mutual funds? Is basically looking at the growth. Like always asking this one question: is my money growing? Is it beating inflation? Is it better than the bank? So my thoughts were always to see that my principal is protected. I should just see that my principal is protected. Like if I have invested 1 lakh, it should be more than 1 lakh. At least I should not lose that 1 lakh. So this is exactly the saver's mentality. Savers always want to see that their money is safe. And let me tell you, even the poorest of poor person will save his money. And what I've understood is, most of us, we like to save. And we'll end up saving right up to the day that we die. We don't like to spend it, because we don't like to lose it. So that saving mentality is basically of the poor people. So poor people who are still saving are basically savers. Then in the next 5 years, that is from 2013 when I started seeing huge returns coming, after 2014 when market went up, and my portfolio suddenly surged from 10 lakhs to 25 lakhs within 1 year. Then my interest in trading started increasing. So I started watching which fund is doing better than the other. So we started keeping on changing the funds. Every 2 years, change the funds. And never put all your eggs in one basket. So we used to keep on putting in different funds, trying to say that asset allocation, this and all this thing. And main focus was which fund is doing better than the other. If his fund is doing better than mine, should I switch over there? And everybody keeps on asking, which fund should I invest in? Which fund is doing well? So this is the thinking of mentality what it was when you actually become a trader. So trader chases returns. So they always go to see where the returns are higher. And most of us also start doing when we do keep on changing the funds. So much so that after exactly in 2019, I was very, very lucky that I happened to go for a trading seminar in Taj Vivanta, organized by Sheikh Khan. And in that they taught us how to do the trading in short, like they showed what is futures, what is commodities, what is options, all those things they showed, and we started learning. And then they gave a nice offer. If you want to really have a lifetime membership and you want to learn trading, you pay 6 lakh rupees one time and you can come and do the courses as many times as you want throughout your life in Bombay or in Bangalore. Whichever center you want, you can go. So I got carried away with it because I wanted to learn about trading, wanted to learn what is futures and options, wanted to do this international currencies, trading and all. So we went for the course, and the first time, luckily it was November 2019, I went for a 5 days course to Bombay, and we started learning what is futures and options. And then they showed us the candlestick chart to see when it's red, when it's green, to buy, sell, they give you credit of 1 lakh rupees, and with that you have to buy lots. So I started doing that, and at the end of the week, my 1 lakh actually turned around 70,000 was left balance. It had gone up, it went down, right? And then when I come back to Goa, I just started asking, am I going to sit on the computer throughout the day? And is it that all the traders grow rich? Because whenever we meet any person who is rich, I have never seen them doing trading. They say, I own this company so much. I own 80% of this company like Titan. I own this much of Reliance. I own. So the thing is, trading is exactly like dating. Dating is for short-term pleasures, marriage is for long-term. So same way, trading and investing is between dating and getting married. In good times and in bad times, you have to remain with that fund. And let me tell you, why people are not becoming rich is because of changing the fund every 2 to 3 years. If anybody has remained invested, in fact here we have quite a lot of clients who have invested for more than 10 years. I can challenge you to show me even one client who has invested through SIPs in 10 years showing less than 15% returns. Even the worst performing funds will give you that much returns, provided you have been with that fund in bad times. But what happens is we kept on changing it. So that is the time after attending that I said, now I don't want to do trading, I want to be investing. So I asked myself, which fund do I have, how many units? Do I know that? And I didn't know how many units are there because I had 34 folios. Then there were 34 funds, all split up one after another. The moment I got this idea of getting married and saying, let me own these many units in this fund, the focus started becoming like an investor. And fortunately, I was so lucky that exactly after that, lockdown came and all the prices dropped down. And stock market fell so much that all the funds were showing negative. So what we did, we consolidated them from 32 funds or 34 funds, reduced it to just 3 funds. And then I made a resolution. In each fund, I will accumulate minimum 5 lakh units. So I started working towards accumulating 5 lakh units. And fortunately, in 2021, we came out with another concept, which is POM-POM. I don't know whether you've heard about it. POM-POM means plenty of money and peace of mind. So in that case, what happens is, for that also there is a story. So what we decided now is, we have these 5 core factors. After this experience, what I feel is, if you follow these 5 things which we follow now, I'm telling anybody can grow rich. Now, the first and most important thing, the focus area what we have started stressing from this year onwards is starting SIP for the children. Now, why have we started this? What is the purpose of doing this? Now, last 7 years, that is right from 2016 till 2023, our focus was on college students. And we have motivated more than 1,200 college students to start investing during their college days. And we have proof because we have that many demat accounts. Suddenly in 2013 March, what I thought of is, why is it that we are not doing for the school children? And then I noticed one big difference. When it comes to children in school, parents don't mind investing for them. But when they are in college, once they cross 18 and they are in college, and you ask parents to save, like now say for example, I will give you an example. Now say Sapira is in college and I am explaining to her and she goes at home and tells her daddy, I want to start an SIP. 90% of parents will say, you start working first, then you start. Don't do it now, because we can't trust what exactly you want to do, whether you want to do trading or investing, because he is now in college. But same thing if a child who is in the 5th standard or 6th standard comes and mentions it to our parents, that I want to start investing in your business, can you start for me one small investment instead of giving me this gift? But I want to become financially independent by the time I'm 18. You won't imagine, if you start for the child himself starts taking interest in the finances. The moment a statement is in the child's name, you'll see the child will start wondering, how much do I own now? What is my value today? And the moment he knows and he sees the power of compounding, he immediately changes from a spender to a saver. A child who has been always spending at parents' cost will stop spending at parents' cost and start investing. Why? Because now he knows that this is his. And which child doesn't want to be financially free by 18? And let me tell you, the biggest benefit that I had in the last 3 months we have started for children, more than the parents, the grandparents are contributing more than the parents for their children. And now these minors are having quite a big lump sum amount, which I can feel that now what we got around 300 minors, all these 300 minors, most of them will be crorepati's by 18. But just imagine if there is a child who you have not started, and then he goes to college without knowing anything about investment, then falls in the group where they start doing trading. Immediately he will not even tell you anything what he does, because whatever they do it without telling the parents. But when you already show him when you were young, when the child is young and you show them, automatically they also start showing you because they know that you are the one who has started it. But if you don't start it, then you will fall in trouble, because today the condition is very, very bad as far as the graduates are concerned. 90% of them are jobless, because even having a postgraduate degree, even PhD, will not guarantee you that you will have a job. But if you don't learn financial literacy, you will end up in trouble. So if you want to put your children into trouble, just don't show them anything about investments. And if you want to show yours, they will never take interest in it. But if it's in their name, they will definitely want to do it. So we need to get the thing started, see to it that each and every parent has a SIP for the child, so that the child starts understanding. And the earlier you start it, the bigger the power of compounding, because the money remains there till the age of 18. And at the age of 18, you can give the statement to the child and say, now it's your turn to take it forward. But already the roots are formed. So that is the main reason why we have started focusing on minors. Of course, this Pom-Pom Club, I'll tell you a nice story about this. I don't know how many of you have heard about this. Why we started this Pom-Pom Club. It was in December 2021, where we met one of our clients who had started his SIP in 2008 in HDFC Mid Cap Opportunities Fund. And that time he had started an SIP of 10,000 rupees per month. And as it was done physical, we had done it for 60 months, which for 5 years. So from 2008, the NAV was somewhere around 11 rupees, then it dropped down to 7, then from 7 it came back, and by 2013 when the SIP stopped, in October 2013, SIP stopped because it was a period of 5 years, and then we didn't know also that it had stopped because we don't get intimation that SIP has stopped. So this was done physical, it was not done online. After that, he just forgot about that fund and he turned back exactly in October 2022. The NAV of this fund touched 104 rupees and he had already bought 62,000 units in the first 5 years when the price was between 10 to 7 to 11. So his average buying price was actually 9 rupees and he already had 62,000 units. You won't imagine, he has invested total only 6 lakhs. That day the value was 62 lakhs and it's only 9 years since he had stopped his SIP. And now what I said is, because he stopped, he could see the profit so much. The gap between his buying price and today's price was almost touching 100 rupees. And the number of units were already 62,000 units. So for every rupee the price was going up, he was making 62,000 rupees profit. So then I said, if in case we try to do this, like accumulate certain number of units, like now say we accumulate 1 lakh units, and then stop it and leave it there for about 4-5 years. That is the time when you will see bigger profits. So that is what we have started now, telling our clients, focus on units, set your target. Once you accumulate, then you can start with another fund. But if you keep this as a retirement, like I'll give you an example. Suppose a child is 25 years old, a student is there, he starts an SIP of say 10,000 a month. By the time he's 30, he accumulates 1 lakh units. Now, say we give him a fund which is at 10 rupees today. By the time he's 30, with inflation, it has to be around 20 to 25 rupees. So if he has 1 lakh units, his value is already 25 lakhs. Let him keep this fund without touching till the age of 40. Now he can enjoy his life. By 40, the NAV touches 100. So he has 1 lakh units which he has bought at an average of 15 rupees or 20 rupees. Today the price is 100. 80 rupees difference into 1 lakh is 80 lakh rupees profit. So now when you see such things happening, that is the time when we have said, yes, now we will introduce this pom-pom club, and let me tell you, within 1 year, we have now more than 800 members in this, who have already decided how many units to accumulate and forget it. And once you leave that fund there, it just grows on its own, because inflation takes care of the rest. So what we are saying is, focus on the units and say, if you want to enjoy with plenty of money and peace of mind, you need to join this pom-pom club. Then after that, we started another thing, which is called as limited period SIP. This is something which is totally different, because when we did our calculations and so on, there is something very surprising. I'll just give an example. Just imagine you do an SIP of 10,000 rupees per month for a total period of 10 years. So total 120 months, you put in 12 lakhs of rupees. At the end of 10 years, even if you take 14% returns, it becomes 32 lakhs. By the time you complete your 10th year. Now, what I am telling is, instead of that, if you put 15,000 per month, but only for 5 years, total you are putting 9 lakhs, there you are putting 12 lakhs. Here you are putting 9 lakhs for 5 years and then leaving it there for 5 years. Period is the same 10 years. The value also is the same, that is 32 lakhs. You can check and see, same it will be 32 lakhs. But instead of putting 10,000 per month for 10 years, you have done 15,000 for 5 years. And if you do 18,000 for only 3 years and keep it there for 10 years, again it will be 32 lakhs. But you will end up, instead of paying 12 lakhs, you are putting only 6 lakh rupees. Now which is better? The 6 lakh rupees one. So the earlier you accumulate the units, the bigger is the power of compounding. Rather than doing it slow and steady wins the race, it's like you accumulate those units first, leave it there and then just enjoy it. You see the thing will grow. So this is what we have started, like limited period SIP. Another unique concept which we have started, which nobody else has advocated all over India, is basically something called couple SIPs. Now what is couple SIP? Both husband and wife contribute their 30% of their salary in the same fund. Like now say for example, we started a fund like ICICI FlexiCap fund, which is now at around 11 rupees. Both husband is contributing 20,000 per month, wife is contributing say 15,000 per month. Total is 35,000. You can accumulate almost around 3 to 5 lakh units within 5 years. After that, by the time you reach 5 years, you're already on 1 crore. And there is no comparison whose fund is doing better. My fund or your fund, who is performing better? Because now it is focused on units. And both of us are accumulating these units, and let me tell you, we have so many couples now who within 3 years have accumulated more than 2 lakhs, some have accumulated 3 lakh units in the same fund, and now they have just left it. And from this fund, they can take care of their child's education, they can take care of all their expenses, even some of them will manage to buy a flat out of it. So, power of compounding is strictly on units. So the more the unit, and it doesn't matter upon which fund, because I'll tell you, even if you start with a fund which is at 100 rupees today, and you start with a fund which is at 10 rupees today, by the time this 10 rupees reaches 20, this 100 rupees becomes 200. So the number of units in the second one will definitely be less, but here you have to accumulate more. But the result is the same. So you be with any fund, it makes no difference. The most important is how many units. Are you thinking like an investor, or are you thinking like a trader, or are you thinking like a saver? The way you think will actually decide your future. So this was something what we started unique, and of course now which is going like hotcakes within this last 6 months from the time we started in January. Our e-flights are going at a very fast pace. Almost every month we are getting more than 10 to 15 clients on this. In Goa, most of the people are actually living poor but dying rich. In the sense, they have investments in mutual funds, they have investments in stocks, they have investments in real estate, but they never enjoy life. Why? Because there is no passive income. Unless and until you have a passive income, you cannot grow rich. Unless and until you make money while you sleep, you will never ever grow rich. If you have to work for money, and if you are waiting on a salary, you are basically a daily wage worker, even though your salary is 5 lakhs per month, or even 10 lakhs per month salary. But the moment you are dependent on the salary, you have to say you are a slave. But the moment you are able to generate money from your investments, or make a passive income, only then you become rich. So passive income is the key for financial freedom. If you don't have a passive income, you cannot say you are financially free. And let me tell you, it's only because of my passive income, today I don't feel like keeping it for myself, I feel like giving it to others. Because I don't want, it's not coming out of my salary, it's coming from my investments. So every time you analyze and see, why is it that all these rich people contribute 90% for philanthropy or for charity? Check any person who is rich. What is the reason? Like, why Ratan Tata gives so much to charity? Why does he live a simple lifestyle? It's mainly because his passive income is good. It's not his earned income. He is not working for it. It is money which is working for him. And unless and until money works for you, you cannot be rich. So you have to be an investor, and say suppose by chance, now you take a fund and you have accumulated say 5 lakh units. And when you accumulated, NAV was say 10 rupees or say was 20 rupees. In 1 year, the NAV goes up by just 5 rupees. Which means you have made a profit of 25 lakh rupees. Now when you notice that you are making this money without working, what will you do? You tell me. Will you just keep it hedging? Or will you utilize it when you know that it's coming without working? But when you don't even know that it's there and it's growing, and you are not utilizing it, then what is the use of growing wealthy? If we cannot make people this like, if we cannot make a difference to society, I am telling you, you will live poor but you will die rich. But if it was my earned income, say suppose it was coming from dentistry, spending is very difficult. Why? Because you are working for it. But when you are making without working, that is the time when you don't mind giving. So that is the reason why, unless you become an investor and you join the pom-pom club and start generating an income from your investment rather than keeping it there. Like say for example, now you have a portfolio of 1 crore. Imagine doing an SWP of 75,000 per month, which is 9%. I can show you each and every fund which I have taken for 20 years. You can always change your rent structure. Instead of 75, you can start taking 50. But you need to keep your corpus intact. And you can see now, what is that risk factor? Because when Sir said about risk, I will tell you what is exactly risk. Risk is only when you see the price every day. Now, if you buy gold, okay, say suppose I am buying 1 kg gold at say 64, with 1 gram is 6,000, so say, I am investing in 100 grams of gold. Can you give me guarantee that that price will always remain the same? I know that I have my 100 grams of gold, but now how can you tell me that the price will remain the same? And the worst part is, I can't see the price unless I sell it. Whereas in equity, I can see my price every day. So now, because I cannot see the price, that's why we say it's not risky. Correct or wrong? See, you have 1 kg of gold with you. Unless you sell it, you cannot tell the price. Now, will you be able to tell? No, I've got this gold ring. Can you tell me what will be the price of this? Unless I sell it, I will not be able to know. So that's why I feel I'm safe. But in equity, what happens? I can see the price every day. Now, because the price is fluctuating and because I can see it, that means it becomes risky. Now, take real estate. Suppose I buy a flat today for 1 crore. Can you give me guarantee that in 5 years how much it will become? There is no guarantee. But why I feel that buying a flat is a big asset and it's a big risk. Actually speaking, today people who have invested in real estate are wealthy but they are not rich because they are not generating any income from it. Imagine having a flat but not generating any income from it. Is it going to give you any satisfaction? Maintenance costs, society costs, all these things. But as an investment, equity markets are giving you much better returns because you have that flexibility, you have the transparency, you have the tax benefit, and plus you have the liquidity. So you can do anything you want, whenever you want. But still, I don't know why people are saying that equity markets are risky. If I can say that I am owning 1 lakh units and I am not losing it till I sell it, then what is the risk in it? Just because the price is fluctuating is risky? No, even if suppose during COVID I had accumulated 1 lakh units, am I going to lose the units? Okay, now if I buy shares, suppose by chance I bought shares, now I'll tell you in shares also how easy it is to make money. It's not difficult to create wealth. Like I started, I'll give you my example of Apollo Tyres. But after 2019 when I went to learn what is the share market, I just took some shares of Apollo Tyres because they were the sponsors for Chennai Super Kings as well as Chennai FC. So when I saw that, I said I want to become an owner of Apollo Tyres. When I check on Google and I check with Shareka, this company has got huge debt. Please don't go into this company. This is their recommendation. I said no, I love this company because they are sponsoring football and cricket. I want to be the owner of this. So I put in 3 lakhs, bought the shares at 220 rupees. And I made a resolution. If it ever goes in red, I will buy more. And I wrote it down. If it goes in red, I will buy more. And fortunately from the day I bought it, has kept on going in red. So I kept on putting 1 lakh rupees till March 2020. Invested 8 lakhs, got around 8,000 shares. Average price came down to 160, but my buying price, but today's price was 120. It was negative by 40 rupees. Fortunately, when lockdown came, the price dropped down to 70 rupees. I straight away put 5 lakhs and I bought shares of this and took it to 19,800 shares, brought my average down to 118 rupees. By August, the average was break-even, in the sense price was that much. Today, you won't imagine the price is 440 rupees. And 23 lakhs invested today values 88 lakhs. Why? Because I am married to Apollo Tyres and I don't want to sell it. I am enjoying dividends out of it. And every year they are sending me dividends of 8 rupees, 9 rupees on this. But now why I could go into shares? Because I can buy in lakhs of rupees every time. So when I have a lot of money, then shares is worth it. If you are putting small money, shares is useless. If that earning per share will not at all give you any income. So going into shares, especially direct equities, you need to have higher risk-taking capacity, and for that you need to have a passive income. If you are still dependent on your own income, going to shares is basically foolishness. You will never make money unless you go to do trading. Trading is like dating. You get pleasure only for that night. After you stop it, forget it. You won't get anything. So it's only for that night that you'll enjoy it. If you have made profit. And if you made loss, of course, that is your luck. So trading is basically for people who are daily wage workers, whereas investing is for people who want to make money even without working. In the sense, you should be owning. So this is what I've learned in this. So now this E-Flex, you need to actually see to it that, and especially I would request all the senior citizens, like now for this we have already made it. We have stopped senior citizens from doing SIPs. We want them to do SWPs because you should enjoy life. You should not just keep on saving till you die. Otherwise there is no use. We need to start enjoying. So at a certain stage, you need to stop. Like now those who have started at the age of 20, 25, you can stop the fund by 30, leave it there till 40 and then start SWP. And imagine when you start getting that passive income, your life will change totally. So this is from my past experience for 15 years, and now I'm telling you, it's very, very easy to grow rich in India. To grow rich, you need to have an SWP. Without SWP, you will never ever be rich. SIP is to create wealth. SWP is to enjoy your wealth. So there has to be two phases. It cannot be only put inside and don't enjoy it. You have to also enjoy it. And if you are blessed much more than the others, start making a difference. Because for me, I always believe, God will only ask one question at the end of the day. I have blessed you with all these 5 talents or whatever the talents I have given you. What have you done with it? Have you made it for yourself or have you made a difference to other people's lives? Because he told me one day straight away, this is now my internal revelation, because I have seen it. When somebody else prays for you, he blesses you 100 times. But when you pray for yourself, he never listens. I am telling you because I have seen it. You can keep on asking him whatever you want. He says, I know what you require, you don't demand from me. I will see what you want. Even if I have to give you a cross, I will give you a cross because all of you are different. Nobody is the same. And I have made each one of you unique. You cannot say that because he has, you should also have. Imagine if all of us were the same. Would that be fun in this world? Imagine if all were rich and there was no poor. How would this world be? Imagine there was no money only. In fact, because of money, everything is happening. But money is basically fun. It's like fuel. Some people can make it, some people have to work for it. So it is always that balance which is created. So now you have to decide on which side you want to be. Whether you want to be on the people, like the investors, or you would like to be like the savers or traders. So this is basically my learnings from the 15 years which I would like to share with all of you. And say a very big thank you for being our supporters. Because 15 years journey has really been quite a different, like stock market only. Because when I started investing in 2008, Sensex was at 9,000. It had fallen down to 7,000 rupees from 18 to 7. And fortunately, I entered at that time. And today it has gone up to 66,000. Nifty was at 3,400 when I started. Today it's almost touching 20,000. So the growth in the last 15 years has been phenomenal. If Sensex has grown so much, why will my portfolio? I'm not putting index funds. Index funds are basically like Sensex. There is no fund manager and all to think, it's done automated. But people who have been fund managers have always beaten this index. And with that, Sensex today in the last 15 years has given you 14% returns. Our portfolios have gone to more than 20% returns. You can check any of your portfolios which are there with us. It is always going above 20%. Especially those who have been there for more than 5 years. In the first 2 years, you can't say. You might have 40%, you might have 50%, you might have even minus. But after 5 years, you see the returns of all your mutual funds. It will be 3 times more than what is the bank. And the biggest surprise today is, still people don't mind paying tax on interest. Like yesterday, I got one client coming and asking me, can you recommend me the best CA? Like who is a good CA over here? Because he has gone and visited 3 CAs and asked, but what's the query? My interest from my FDs has come to 23 lakhs and I have to pay tax of 7 lakhs. One CA says I have to pay 7 lakhs, one CA says I have to pay 4 lakhs, and one CA says I've got something about 6 or 7 lakhs we'll have to pay again. So he's wondering now which CA to believe in. And I told him the best CA is myself. You bring that money to mutual funds and pay 0 tax. So why are you worried about it? In mutual funds for holding you don't pay even 1 rupee tax. But still you're keeping in FDs to pay the tax on the interest. And what is FDs now? Since we have started this diabetes club, you know FDs are all the fatty deposits. You only get cholesterol with it. Because the tension of that money degrading is still worse. And still we are keeping in fatty deposits. Instead of putting in muscle fibers which are mutual funds, AMFs, we still keep it there. When AMFs gives you so much of stability, like if you go in the multi-asset fund or you go in the balanced advantage fund, the risk is so much minimal. Like multi-asset is what? You're putting in gold, equity and debt. So when you put in all three, whenever equity market goes up, gold prices go down, we know. But whenever market goes down, gold prices go up. So you're still maintaining balance. And when you're able to save 30% tax on it, that itself is a profit. But we don't go to see that. We say we want money secured. Okay, now what is the advantage of paying deposit? Okay, whenever you need, you can take that money. And who said you cannot take it from your mutual funds whenever you need it? But would you like to make your money sleep at 2% or 3% in the bank in the AC room, or you want your money to work for you? So if you want to make your money, you need to actually invest it rather than saving it. So this is my experience. So we want you all to be now ambassadors of Navemar, telling your friends and family members, and especially those who have children, if they don't start investing it for their child, they are going to be committing the biggest crime of their life. I'm telling you. Because by the time the child is 18 and he sees that you have not done any investments for him, he'll say, my parents didn't know anything about it, whereas my friends' parents have already started it. And they will compare with their friends and they will curse you because their friend's father has already taught. And if their friend's father has taught, that boy will always, respect that friend's father rather than you. That is for sure. Because everything related to money gives respect. So finally the ones who are rich get respect. Why? Because that is the thing, the power what is there in money. Money is like a fuel. Like why all the sheikhs get respect? Because they have a lot of petrol and all with them. So money is what gives you respect. So if you learn how to manage money, anybody can grow rich. Okay, so once again a very big thank you for all of you for making your time for today. It's just a small celebration that we wanted to say. It's a milestone where after completing 15 years, our entire thing is going to change. And I know that with the power of compounding, what has taken us 15 years will not even take more than 3 years. From 80 crores, that is from 400 crores to 1000 crores, is not going to take even more than 3 years for us. Because we know now what the things are, how the thing works, and how the attitude actually makes a difference. So much so that even though we have 3,400 clients with us, we have picked up, there are 800 who are already millionaires with more than 10 lakhs. There are 250 with more than 50 lakhs, and we already have 71 crores. And by March 2024, when we had set a target of having 100 crores, we are actually going to cross that figure. Very soon we are going to have 100 crores with us with more than 1 crore in their investments. And all these are going to be the Pom-Pom Club members who will definitely start taking SWPs. So if you start with an SWP, on 1 crore you can take 75,000 every month, you will enjoy life like anything. My target is to protect your principal, but yours is enjoy it. Don't just keep it there. Enjoy it. If you don't need it, make something for a difference for the society. Do something, contribute and make a difference, because finally you definitely enjoy it.